Scan to unlock Sovi and ace your tests. Unemployment drops while interest rates stay flat, so we need the policy mix that boosts output and jobs without raising rates. Watch this quick solve. To lower unemployment in the short run, the economy needs expansionary policy that raises aggregate demand and real output, because higher production means firms need more workers. An increase in government spending shifts aggregate demand right, but that usually raises interest rates, so you also want expansionary monetary policy to keep rates from climbing. With limited reserves, an open market bond purchase expands bank reserves, supports more lending, and offsets upward pressure on interest rates, making B the match. Well done. Option B, scan now. Watch signs and avoid rush. Trust given conditions, then check steps, so falling unemployment with constant rates points correctly.